Hello, this is Ahura. I'm here with you with a short short review on the economy in the week ahead. However, before going through the week ahead, first we will watch what we had last week and data that we had last week and market reactions. Then we will see what we can expect from the week ahead. Last week we had too many data. Let's start from the United States. In the United States, we had the housing market data and durable goods orders, most important data that we had. Also, PMI data on Thursday. Housing data for the existing home sales and new home sales, both they were less than expected. They published less than expected. Existing home sale decreased by 1.9% in April. Same condition we had in the new home sales with the 4.7% fall in April for the new home sales. Both of them, they somehow showed the effect of the higher interest rate for the longer term that we had, and they can affect in the housing market with increasing the house price and less affordability of buying the house for the citizens. Then on Thursday, we also had the initial jobless claims, which shows that the labor market is still strong with 215K only apply for the unemployment benefits. At the same time, we had PMI data. PMI data on Thursday showed that the manufacturing activities, that's manufacturing PMIs, where is that? Yeah, here's the manufacturing PMI increased from 50 to 50.9, and service PMI increased from 51.3 to 54.8, which shows both that the economic activity in both service sector and manufacturing sector is a little bit better than estimates. And finally, on Friday, we had here on Friday, yeah, with Michigan consumer sentiment and Michigan University, generally we had the Michigan University surveys, which shows that the 1-year inflation expectation increased from 3.2 to 3.3. That was a little bit less than estimates. The market was expecting the consumer to expect a 3.5% inflation a year ahead, and for the 1 year, for the 5 years, 3.1% was estimated, which consumers expected 3.3 and 3.0 for 1 and 5 years ahead. That helped us support the stock markets on the last day, and it increased the pressure on the US dollar index. That was the most important data that we had last week. With these data that we had generally helped the by the way, I was thinking about which data I forgot. On Wednesday we had Federal Reserve meeting minutes of the April meeting, which showed that most of the FOMC members, they support waiting for longer before cutting the interest rate. They are waiting for more evidence to see that inflation is really in the way they want and it's under control. That was what we had in the United States. Other places in Asia, if we go to Asia, in New Zealand, in New Zealand, we had a central bank meeting that RBNZ held the interest rate at 5.5%, 5.50 BPS. But that tone in the statement was a little bit more hawkish, and they told that they don't expect any rate cut before mid-2025, which helped the Kiwi to increase during the last week. In Asia, we had the Japanese inflation numbers as well on Friday. If I don't mistake, on Friday we had inflation that showed that inflation in last month increased by 0.2%, which means the annual scale is 2.2%, in line with the market estimates, in line with the central bank estimates. Inflation is not a big deal in Japan, so with this data we can expect we can expect this ultra dovish policies to stay there for longer. That's couldn't help the Japanese yen to gain against its crosses and lost the ground against the US dollar to 157 again at the last days of the week. Generally, the Japanese economy is a little bit kind of struggling, but the central bank that's the reason that the central bank they told that they can hold these dovish policies for longer. In Europe, we had a PMI data. The PMI data generally on Thursday showed that economic activity in Eurozone in both manufacturing sector and the service sector is increasing a little bit better than estimates, and showed that the European economy is kind of getting used and learning how to compete with the shortages that they have in the market. So that helped the economic activity in Eurozone generally. In UK also, we had the PMI data that was a little bit kind of the mix in the service sector. It was not that good in manufacturing sector. It was better than estimates. But inflation numbers that we had on Tuesday from the from the UK, right, on Tuesday. If I don't mistake, yeah, we had on Wednesday. Sorry, we had on Wednesday inflation numbers that we had on Wednesday from the UK showed that inflation in April increased by 0.3%, and producer price index (PPI) increased by 0.6%, both much more than estimates. In the annual case, in year over the year, inflation fell to 2.3% from 3.2%, but it was higher, a little bit higher than 2.1% estimates. On Friday, from the UK, we had retail sales numbers showed that the retail sales in the UK is disappointing. It was disappointed on with the more than 2% fall in annual scale, which means that generally the people they are not ready to spend too much money, and interest at the retail sales was disappointing. These data generally, especially when we saw that the inflation economic activity was not that bad on Friday, and PMI with the PMI numbers, and inflation higher than estimates on April. Kind of the market now thinking that the central bank in United Kingdom will not decrease the rate in August, and we will cut the rate probably in September. So a little bit later, that helped the UK sterling to increase against its rivals, and performed as a best currency last week. In the week ahead, that was the last week. If we go to the week ahead, in the week ahead, on Monday it's the holiday in the United States and United Kingdom, as well as some other countries. But week will be start in the economic calendar start on Tuesday for United States with the CB consumer confidence, which is expected to fall for the fourth month in a row to 95.9, almost 96, which shows again that U.S. economy, despite some positive data that we had last week and on some other weeks as well, still underground economy is struggling, and we need to expect more pressure on in the different sectors in the market. The people probably they will start spending less, as they started spending less for the house to buy the houses, and a new home and existing homes both fell by 4.7% and 1.9%, which were not such a encouraging numbers. Then later on Thursday, we will have the GDP numbers from the United States, as well as the core PC price index for the first quarter. We will have the PC price index, personal spending and income on Friday. So probably the market will wait till Friday to react to these data that we had on the Thursday. But generally, we are expecting to see that the inflation number for inflation for personal spending is a little bit decreasing, and personal spending itself also can fall a little bit, which shows that the people are not spending is expected to increase just 0.3%, much less than 0.8% that we had last month. So that means that the people probably they are getting more pressure from the higher interest rate for such a long term that they had, at least they feel in this way, which means that probably in the week ahead, the US dollar will get some pressures and the stock markets will get benefits from that. But that would not be such a huge pressure on the US dollar or jump on the US stock market. So probably side movements. I mean, their pressure probably will be equal kind of. Out of the US, we will have the GDP in Canada as well. We have to watch that. Canada, probably with the data that we had the last week from the inflation numbers, which was not such, which was less than expected, and with the GDP data that we are expecting to see on this Friday, both they will help us to, which is expected to show weaker number. Both of them will support that Canadian central bank to cut their rates much earlier than other central banks. In China, in Asia, we will have the Tokyo CPI on Friday, which is expected to show 1.9%, which is kind of something lower than 2% central bank target, which means that the central bank in Japan can hold the ultra low policies for longer, which will be supportive news for Tokyo stock markets, but the Japanese yen will get more pressure. In China, we will have a manufacturing and service PMI. Both of them are expected to show a little bit slightly increase. And with the Saturday's OPEC meeting, which is expected probably to show some more restrictive, some less production and stuff like that, at least to talk about these topics. Both of them will can support the energy price, especially the oil price at the last days of the week. In Europe, we will have a GDP and inflation numbers from most economic Eurozone member, from Germany, from France and other countries, and most of the Eurozone members, Eurozone countries. We will have a GDP and inflation numbers. Inflation are expected to show that it's in line, which is, if we go through and watch the Eurozone inflation numbers, expected numbers, which is expected to increase from 2.4% to 2.5%, but it will be probably in line with estimates. Core inflation also expected to stay unchanged at 2.7%. However, if we see these numbers, which is expected to be seen, we will not that will not change something specific in the markets. Probably we will hold the same overall option that we have in the euro, and European stock markets also can slow down their movements. I will show you on the chart what's expected there in Europe, UK, United States. We talked about that. That's the most important data we have in the week ahead. But if you go to the chart and see the market condition in the chart, that's the Ethereum price. On the cryptocurrency market, I'll show it since it's Ethereum chart. In the cryptocurrency market, you know that the SEC confirmed the ETH Ethereum or ETH Ethereum ETFs. That kind of created a new bullish movement in the cryptocurrency market. Both Ethereum and Bitcoin, they increased in the last day of the week, and still they are increasing in today on Saturday. On the other places, US dollar index, if you go to the US dollar index chart, you see that that inflation expectation that we had on Friday from the Michigan University surveys, that helped that pressured on the US dollar and helped the stock markets a little bit increase on Friday and US dollar to get pressure. But for the week ahead, all eyes will be on Friday's PC, personal income and spending. Most probably till Friday, we will have mostly side movement in both the stock markets and the cryptocurrency in currency market. US dollar index probably will move between 104 and 105, while S&P 500 also expected to continue side movement, but probably under 5,250, which is the main for now, kind of somehow it's a pivot point, 5,250, 5,300 around this number. Probably US dollar, USA 500 or S&P 500 will fall. We'll have a kind of slight movement around these numbers. I talked about the US dollar index. Yeah, that's the overall market and market condition, what we are expecting to see. In a Euro USD, if we chart the Euro USD as we have too many data from the Eurozone as well, GDP and inflation numbers, we don't expect to see any, as I told, specific changes in the Eurozone chart. In Euro chart, probably Euro as it's covered back above the trend line. We're expecting to overall uptrend to continue in Euro USD chart, especially with the 1.08 as its first 85 as its first resistance, 1.085. That's the overall market condition. If you have any other question, you can write down under this video in Instagram and YouTube, and try to get back to you as soon as possible. Have a good day. Bye.